The stock market has reached another all-time high this week, even though the Federal Reserve did not cut interest rates. And I'm going to tell you why. First off, Meta, with the CEO being Mark Zuckerberg, they reported earnings on Wednesday after the market closed, and the stock went up over 10%, completely crushing expectations. They also expect the revenue to grow a lot more than Wall Street expects them to grow by next quarter, with Wall Street expecting a $46 billion in revenue and the Meta team expecting up to $50 billion in revenue. Mark Zuckerberg also placed a huge emphasis on growing their AI capabilities over the course of a year. And all this is the reason why their stock price went absolutely insane. Another contributor to the market seeing all-time highs was Microsoft. They also reported earnings on Wednesday, and their stock price went up nearly 5%. They also crushed their earnings and provided forward guidance, beating Wall Street's expectations as well. Microsoft saw their AI revenue increase over 29% last quarter, which is massive. Meta and Microsoft added a combined $550 billion in market cap overnight, which puts Microsoft in the $4 trillion club along with Invidia. Speaking of Invidia, their stock price has been going absolutely insane these last few months. I hope you bought some because now they're worth almost double where it was at back in April, with their stock price being close to $180 a share. Boom! Apple was up close to 2% after they reported earnings, and they beat expectations when it comes to the total revenue and earnings per share. However, what's holding them back from going up even more is the concerns with the US tariffs on China, India, and Vietnam. And the tariffs can cause an impact on their overall earnings by 7%, which is approximately $3 billion by the end of the year. Apple Intelligence has also underdelivered, and the Siri AI upgrades were delayed once again. We'll see what happens, but personally, I'm not the biggest fan of Apple stock because even though I use nothing but Apple products, I don't really care to upgrade anything that I have. They haven't really been innovative for the last 5 years or so when it comes to most of the products, so I'm not really missing out on anything. And I know a lot of people that are also thinking the same way. Amazon also beat expectations across the board when it comes to the revenue, but they're down close to 5% because of their lowered guidance for next quarter. They also have tariff concerns, which plays a major role within the company. Listen to this. Can you believe that 70% of the products that's sold on Amazon are from China? 70%. And another 14% comes from India. That's wild. Another 4% comes from other countries, but you're telling me that only 12% of the products that are sold on Amazon are made in the US? Unbelievable. So yeah, knowing these statistics, I can definitely see why the stock has been dropping. Even though tech earnings have been mixed so far, just remember that pullbacks and corrections in the stock market are needed. The market needs to take a breather from this historic run-up. One thing to mention though is core PCE, which is the Fed's favorite tool to track inflation. Well, this spiked up a bit higher than expected today, which is part of the reason why we saw the market drop the way that it did today. But if you look at the bigger picture, I don't think it's a big deal. But again, we need the market to breathe. The market can't just keep going up. I mean, come on, it's messing with my investment strategy anyways. I really only like to buy stocks as they're dropping, so how can I invest if it keeps on going up? But that's all for now. I'll continue to keep you posted as more data comes out. Make sure you like, follow, and subscribe, and I'll see you on the next video.